Welcome to another S&P 500 analysis. Today is March 17, 2021. Today is Fed Day. The FOMC concluded their meeting and the Fed announced the latest interest rate policy. And it is, surprise, surprise, unchanged. Well, we all know that, right? But here's what the Fed Chairman Powell said in the press conference. He said, we are in a happy place. Well, is the S&P 500 in a happy place? In this S&P 500 analysis video, we're going to analyze the price action of the S&P 500, the NASDAQ 100, and the other major market indexes along with the market sentiment and the market internal, and see if the S&P 500 and the rest of the market is in a happy place. So stay tuned. Let's start off with this intraday 15-minute chart. Up here is the S&P 500, and here is the new high, new low from the for the New York Stock Exchange, and this is the up-down volume ratio, and here's the VIX, and this is the put-call ratio, and then the advanced decline. So as you can see, the S&P 500 open gap down, and it was negative throughout the morning until at 2 p.m. Eastern Time. That's when the Fed announced the latest interest rate policy. And as soon as the announcement came out, you could see that the S&P 500 just shot up. And also, in addition to that, you can note to see that the up-down volume ratio was negative throughout the entire morning. And it also took a little peak above the, turned positive just for a brief moment. Right before the FOMC announcement, the Fed announcement. Then soon after the announcement, you could see that it turned positive and stayed positive throughout the rest of the session and closed the day positive above 2 to 1. Right? And also, you notice the VIX. The VIX was sitting above the 20 level. Okay. Then as soon as after the announcement came out, it dipped back down and dipped below the 20 and stayed underneath it for the remaining of the session. Now, the put-call ratio didn't do too much. It didn't change that much. It was basically been hovering around this 0.55 area, 0.55, 0.57. So it finished the day near this 0.577 area. But notice the advanced decline, right? First, it started off with more declining issue than advancing issue. And soon as after the announcement came out, the advancing issue led the declining issue. Although not by much, but it turned a lot of these declining issue positive. Then in addition to that, a little bit more, right? More than the issue that is negative. So that's why we get more advancing issue than declining issue at the end. And it was somewhere around 220, right? So we're going to take a closer look at these on a daily basis later on. But as you can see that, as soon as after the announcement, we saw this surge came in, and then it just turned positive and remained positive throughout the remaining of the session, and then closed with a new closing high by the S&P 500. Now, here's a different look of the intraday internals. On the upper section of this chart here, these are the New York Stock Exchange up-down volume. You can see the up-down volume was negative, right? More down volume than up volume throughout the morning session. And here's that little positive area here right before the Fed announcement. Then soon after the Fed announcement, you see this all just gapped up with positive up volume greater than the down volume, and the remainder throughout the remaining session. Right? And also looking at the advanced decline, you see the advanced decline. It started off the day somewhere around here. Right? Let me find this right here. Okay, and start out negative, and then try to move up to up to the 400 level, 439, and then it came back down again and went as low as 1,485, more decliners than advancing issues. then it start coming back up. And notice this is right here at 2 p.m. Eastern time. That's when after the Fed announcement, see how it surge up and then turn positive right around half an hour or so after the announcement. Right? And then it just sort of stay positive throughout the rest of the day, except this little bit of retracement just dipped down to negative little brief period of time, with a little bit more declining issue than an advancing issue. Now look at the cumulative tick. The cumulative tick is essentially, it's negative throughout the day. But the thing is, you notice that throughout the morning session here, the negative tick dominate the entire morning. Here we see this minus 500. So you got a lot of sell program coming in throughout the morning, and pretty much a lot of selling pressure with negative tick. There are some positive ticks up here, but not as many as the negative one. Right? Then if you notice here, this is 2 o'clock Eastern time, 11 a.m. Pacific time, and you see it surge up, and it got up to somewhere around up at the 1,000, positive 1,000 area. So there was strong buy program came in soon after the Fed announcement. And just like any Fed announcement day, the market usually go one direction. If it happened to feel that it want to go up, so then the market move up. Then after it move up, then you got the counter move, the responsive move that move down. Then once it finishes that responsive move, then the market will resume back to what it wanted to do based on the Fed announcement. And in this case, is the to the upside, right? So that's why you see a little bit of a sell-off here after the initial move after the Fed announcement. Then it resumed back up to mostly positive, although we did see some selling down here near the close, but it still remain predominantly in the positive area after the Fed announcement. Right, and you see the SP 500 open gap down, and then it's kind of just pretty much hovering. Came down, test the overnight low by the E-mini SP 500 overnight low, and it's just kind of trapped inside of this initial balance area, and just stay above the chopping around near the IB low. And as soon as after the Fed announcement came out, you see that the S&P 500 just moved up, and then came back down, retraced a little bit, try to back test this IB high, then it just moved back up, and then it just finished at 3973.96. So that's a new all-time closing high. Similarly, if we look at the NASDAQ, right, the NASDAQ up-down volume also is pretty negative throughout the entire morning. Then after the Fed announcement, it turned positive and then stayed positive throughout the remaining session. And same thing with the advanced decline. You see the advanced decline actually went negative 2010. Then it started to come back up right before the announcement. It was sitting somewhere around this minus 1,000. So there were 1,000 more declining issue than advancing issue. Then as soon as after the Fed announcement came out, you see how it went up and turned positive. Then during that little bit of a profit-taking period, pullback, then it went negative. And as soon as after that is over, then it just resumed back positive. And finished the day up at 828 or so, more advancing issue than negative issue. So you can see that's a heck of a turnaround from minus 2,000, a little bit more than 2,000, and turn to positive 800. So that's a pretty strong turnaround. Same thing with the New York Stock Exchange, although the New York Stock Exchange did not finish with that many advancing issue over the declining issue, but you can see the turnaround is still pretty impressive. It was down at this minus 1484 and turned all the way around from that negative value to positive 220. And the same thing with the cumulative tick for the NASDAQ, predominantly, negative, and it finished off the entire day negative. But you can see that in the morning session, there's a lot of selling pressure here. You see a lot of negative ticks down here, and a lot of touches down below the 500, the minus 500, and some at minus 800. But then, as soon as after the Fed announcement, you see these right here actually went greater than 1,000, positive 1,000 ticks. So there are a lot of strong buy program here, and here are the 800. So after the Fed announcement, most of the tick is positive. And likewise, you look at the NASDAQ 100, it opened gap down, came down to the overnight low, the E-mini NQ, the NASDAQ future, and then just kind of hovering around within this IB range also. Then as soon as after the Fed announcement, just shot up, and it came back, back test the IB high, and then pushes up. So, and then finish with a positive. So that's another look of the internals. Now let's take a quick look around the daily chart of the sentiment and internal, just kind of get a perspective on a day-to-day type of comparison here. Here's the SP500, and here's the VIX. See the VIX, it's hovering below the 20 level, and closed the day at 1923. And also you can see the put-call ratio is still a little distant away from the 0.75. It's sitting up at the 0.57, so it's near this 0.55 area pretty much. Been most of the time been sitting between this mid 0.4 to the mid 0.5 area. And here's the up-down volume ratio. As you can see that the up-down volume ratio is only 2.45, but all in all, it was negative throughout the morning session. When we look at the intraday chart, right, it was pretty much negative, except until after the Fed meeting, the Fed announcement, then we saw it turn positive. So it closed positive at 2.45, except, like yesterday, we saw a negative 3.26. So there were 3.26 times more down volume than up volume on yesterday's. And here the advanced decline. Today's the daily advancer led the decliner by 257. Remember on the intraday, most of the morning, the entire morning, it was negative, right? So it turned positive. So in that sense, sometimes when we just look at these chart here on a daily time frame, it might not provide us with the bigger picture of the context of where the market been and how did it get here, right? And sometimes that particular picture provide us with some context, then we won't misinterpret some of these value here to say, oh, the market is kind of weak. But we are seeing a little bit of a weakness in the market. I think for the recent run up right here, certainly there are signs that the market is getting a little tired. But is that a sign that the market is topped out? Well, we'll take a look at that a little bit later, more data and some price action, and see, have they topped out yet or haven't they? And here's the new high, new low. You can see that the new high outnumbered the new low today by 196. So comparing to yesterday, with a down day of yesterday, it's a little bit less than yesterday, but still overall it's not bad. And here's the advanced decline, cumulative advanced decline. Now, because the little bit softness in the advanced decline, right? The cumulative is also a little bit soft. Okay, so we did not see the New York Stock Exchange cumulative advanced decline come up and put in a new high, but the S&P 500 closed with a new closing high. So this kind of tells us maybe in the coming day we might see a little bit of a pullback, consolidation, and let the market sort of rest a little bit, and maybe give a chance for the other sector to sort of regain its momentum a little bit, right? So let's go and take a look at the NASDAQ. Similarly, the NASDAQ, here's the up-down volume ratio, and it was 2.426. It finished the day. So the advanced decline is 768, more advancer than decliners. And here the new high, new low, there were 119 more new high than new low. Again, it's a little bit less than previous day, but all in all, it's still positive. Then again, the cumulative advanced decline, similarly to the New York Stock Exchange one, is got a little bit soft. It did not close out with taking out the prior pivot high, while the NASDAQ 100 is coming up, took out the previous pivot high, still having a little problem coming up to this high here. So that's the pivot that we probably need to pay a little bit more attention to in the coming days to see how the NASDAQ market is handling on getting above this high here. Now let's take a look at the daily chart of the SP 500, and you can see that it finished with a new closing high today, and also intraday it made a new intraday high, and that was after the Fed announcement. Okay, so on the softness of some of the internal, especially the advanced decline, and sort of a little bit tired, the market getting a little bit tired, so we won't be surprised to see this come back down a bit in the coming days. Maybe come down and check this trend line here for support, right? Somewhere around this 3,900 area. And if we don't see it basically getting a bounce off of this 39 area, then we could see it once again come down to this 3870 area, maybe come down here and check for support. For the next couple of days. Those are the downside level that I would be watching, is this 3,900 and this 3870. Now for the upside, sure, it could just shoot right to this 4,000 and come up and try to tag this upward trend line here on this channel, and that would basically get it close to this 4,500 area. But I wouldn't be surprised that it will try to make an attempt to get up to this 4,000 and then get rejected and pushes back down to the 3,900. So those are a couple of the up-down scenario that I will be watching for in the coming days, the next few days here. And here on the NASDAQ 100 chart, you can see that it's still having a little bit of a difficulty getting up into above this zone here, this 13,280. You see, yesterday kind of tried to get into the zone and got rejected. Today, same thing, after the Fed announcement came up, and also got rejected when it got up to into the edge of this zone here. So for the coming days, we want to see, would it be able to gather enough strength and push through? And if it could push through, then we're basically looking for this gap to get filled, right? Just above this maybe 13,500 area. Right, to see would it be able to fill this and then come back down to a little bit of a back test to before it pushes up and try to test the all-time high. On the downside, basically looking for this thing to come back down to this 12,800 area, this zone here, on the near term, the next day or two, to see would it be able to find some support here and chop around a little bit. But if it can't, then I'm still looking for this 12,439 and this 12,204. So these are the levels that I will be watching on the downside, right? The 12,800, the 12,439, 12,204. Then on the upside is basically this 13,500, 13,500, 13,600 area. And we see on the Russell here, the Russell 2000 did not make a new closing high or a new intraday high. So it kind of pulled back and maybe forming a little flag here, but in regardless, we'll probably be looking for a little bit more of a pullback, maybe come down to this area here, somewhere around 2260 area, and possibly to this trend line, and that would put it near this 2250. So wouldn't be surprised to see the Russell 2000 make its way down to this area and test for support in the next few days or so. And then on the upside, basically you'll be looking for this thing to come up and try to take out the 2380, 2360, the all-time high here. And the Dow Jones Transportation also, similarly to the Russell 2000, did not make a new intraday high, nor did it close at a new all-time closing high. It's essentially pulling back. So once again, if on a downside scenario in the next day or two, I'd be keeping an eye on this 13,656 area, for a possible test for support. But if it could push through the new high, take out the all-time high, then I'd be looking for a possibility for this thing to come up to test this 14,500 in the next few days. That would be the upside scenario. But eventually, if it continue to move up, then I'd be watching for the Dow Jones Transportation to come up to the upper channel trend line near the 15,000. But for the next couple of days, I basically be watching this 14,500 and then this 13,656. And here's the Dow Jones 30, the Dow Jones Industrial. It made a new intraday high and closed with a new all-time closing high. So once again, it's basically been hugging this upper channel trend line. And I wouldn't be surprised to see it come back down to this particular trend line here and this intermediate channel somewhere around this 32,530 level in the next day or two. And if it can hold above this trend line, then I'd be looking for a possible move of coming back down to somewhere around this 31,680, and that would be in confluence with this lower trend line, the lower channel trend line here on this intermediate trend line. So that's basically what I'd be watching. And if it continue to push higher, then be keeping an eye on this 33,500. So that's basically what I'll be watching, on the upside, possibly trying to make toward the 33,500, not necessarily get to there in the next day or two. But on the downside, I'll be looking at the possibility of this 32,530 and then this somewhere around this 31,500, 31,500, 31,600 area. And before we go and take a look at the 10-year yield chart on the 10-year and also on the dollar, I just want to take an updated look on this index chart here. You can see that the only index that made a new closing high is the Dow Jones Industrial and the SP500. The New York Stock Composite and the Dow Jones Transportation did not. Okay, and the nasdaq 100 and the nasdaq Composite still a little bit away from the all-time closing high. And similarly, the Russell 2000 did not come up and close with a new closing high today. Okay, so today the Dow Jones Industrial closed with what we call a non-confirmed or unconfirmed Dow theory high, but it is confirmed by the S&P 500. So in that sense, we could see new high from the Dow Jones Industrial and possibly from the S&P 500 sometime in the near future. So that's what this chart is telling us. Even though we just come down to two index now today, close with a new closing high. Here we are looking at the 10-year yield chart here, the 10-year Treasury index. You can see today is sitting at 1.641. You have to move the decimal point to one place to the left, okay, to get the percentage. And we can see that there is a little bit of a resistance up here at 16.93 at 1.69. So if this thing moved to, we could see 1.94, 1.95 close to 2.0, and 2% on a 10-year yield. That wouldn't be too surprising. But again, putting in a proper perspective, in a historical standard, that is still very low. Although a lot of people say, oh, it's the pace that it came up, that's what scared people and all this other stuff. So I don't think right now the bond market wanted to pick a fight with the Fed yet. Okay, because the Fed say they are not going to reduce rate until they see the inflation actually come up to above 2%. And Chairman Powell today said it many times. Specifically, he said we don't want to operate on forecast inflation. What we forecast inflation might be, we want to see actual inflation. So in other words, he is going to wait until inflation, the economy run a little hot before he even decide to put on a brake. So I don't think right now, no matter what the bond market is trying to push the Fed to do, the Fed is not going to raise rate. And with the dot plot today, they presented the dot plot. They say there's 11 committee members put down their opinion that maybe in 2023, there could be one rate hike. And I believe there were 3 committee members say maybe a rate hike at the end of this year, 2021. So again, the Fed is not gonna do anything to the rate, no matter what the market is gonna push it. Now maybe after when we see a reopening of the U.S. economy, after the summer and into the fall, that things are really starting to heat up, then that might change what the Fed's posture of talking about raising rate. But right now, they are not going to jeopardize this $1.9 trillion stimulus package, okay, that just passed. They're going to let that work through the economy first, right? They're not going to go and spook things and try to put a brake on it before those money even hit the economy. So they're going to let that pump and let that run for a little while. And so we might see the rate, kind of back off to maybe to this 1.2, 1.5 area and just sit there, just sit there for a while, all right? Now, that's my opinion. I mean, I could be completely wrong. I have no insight. I'm just reading the chart here. Okay, I could be totally interpreted incorrectly, but that's what I see. So if you have some other insight on this, post a comment below and share that with the rest of us. Or at least I would be interested on a different point of view of what you guys think the rate going to be, and what the bond market going to do in the near term. And here's the U.S. dollar index, and I've been watching this 92 area. I was basically looking for this thing to come up and then kind of back off and come back down. So right now it's still kind of hovering near this 92. Now, in order for this dollar to get any traction, I expect it to have to at least get back up to this 94 level. So even though it come in here and back tested, it still need to come up to this 94, because I'm still looking for a weak dollar. If, for example, the rate going to stay low and the Fed is already let the market know that it's not going to raise rate until at the earliest, it looked like 2023. Okay, so and I wouldn't be surprised to see the dollar once it starts retracting, that it could come down and dip below the 90 and possibly come back down to this 87 area. I do not expect it to go back up above the 94. If it does, then certainly things have changed in terms of the interest rate outlook from the Fed. Until we get this pandemic over and the global economy sort of recover to a certain extent and start going back up again, then we probably will start hearing possible rate cut, a rate hike and those sort of things. But for now, I think it's too soon. Yeah, the bond market might be having a little fit, but the Fed is already saying it doesn't care unless you could, physically manufacture physical inflation for them to see that is up above 2%. They're not gonna even think about raising rate. So is the S&P 500 in a happy place? Well, based on what we saw in terms of the internals, it certainly look a little bit tired. Not just the S&P 500, but the other major market indexes such as the Russell 2000, the Dow Jones Transportation, even the Dow Jones Industrial, and the New York Stock Exchange Composite. So I wouldn't be surprised to see a little bit of a pullback in the near term, and then regather momentum before we see the next push up. So yeah, if you classify that as a happy place, maybe it is a happy place. But in regardless, I'd be a little bit cautious and be picky. Again, based on the theme of reopening and also the rotation from the large cap tech stock, to some of the energy, financial, leisure, and traveling stock. Just be picky and cautious. And be sure to smash that thumbs up to help me promote and share this video. Thank you for watching and stay safe.